everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. Today, we're taking a look at the crude oil market, and for the most part, continuing the range from yesterday. Now, like we were talking about in the Outlook newsletter, we were looking at that first big bar that we had form on the first 5-minute bar of the week, right? That level is going to tend to be an area of support or resistance for most of the day, and if the market can't get away from that area, high or low, that location could play a role for the rest of that day, but also potentially the rest of the week, and we saw a lot of that today. Now, when we gapped, we didn't really gap with much. We had a very small gap gap down, immediately filled the gap on the very first bar. So we're continuing that range-bound sentiment, not really a whole lot going on for the market, just kind of slow in general. And with that slowdown, we need to be a little bit more cautious. So when we're looking for movement, we want to cycle off of big areas of interest, right? Prior range highs, prior range lows, major levels of support and resistance, etc. So when we come in today, we have a very small gap down and then continuation to the upside. Now, if we draw off of the lows and we draw off of the highs, we can quickly see some pretty stiff areas of support and resistance. Now, the one through the highs is mostly just a flat-topped wedge, right? We have the lows right there, and we have the highs rising through, and that leaves us with a wedge scenario. We come to the top of the wedge, that's also the prior high of day, and we start looking for the market to fail back lower. Now, I have this one marked because it's an area of interest. It's not one that I would generally recommend because you're first to the party. We don't want to be first to the party. But it does make a lot of sense for traders who maybe were a little bit more aggressive, who saw that major failure at the highs and it turned back down. They're going to look at that with some pretty anxious eyes, looking to want to sell back lower again. So I have it marked up because it honestly wouldn't hurt my feelings if someone told me they took that trade. Personally, for me, though, I would rather wait for another reason to get in. We push down, find support off of that same major level. The buyers try coming in. We trap the buyers in. Now we got them, right? We turn back around. We shove the stops right through the buyers' throats. And now we look for the downside move for a quick scalp lower. That's the kind of movement that we want to see. Now, we get down to the low of the day. Keep in mind, this is the first candle of the day right there. And we come down and we also have the gap, which if we mark in a different color, let's use purple, this is the gap. So we come down, we fill the gap, we test that first candle's low of the day, and we can't get a close through those levels to save the sellers' lives. So something is a little bit wrong here. Again, I'm not a huge fan of taking the first attempt long, but it is an area of interest that I know buyers will have taken, and it's another one of those that, although I personally wouldn't take, I know a lot of traders would, and it wouldn't hurt my feelings on this one either if someone took that long. I want to wait for a little more information, though, and the market tries rallying higher. It stalls out sort of in the middle, comes back, tests those areas again, failing to make a new low. It misses the low of day by one tick, turns up, and look at that beauty of a candle right there, and that is the signal that we have now trapped in sellers underneath the lows. We cannot get through the low of day. We're to the tick testing the gap, and we have a one-tick miss of the bottom. You better believe any sellers who are left over are going to be exiting above that, and any buyers that haven't jumped in yet are going to be looking at that as a pretty big opportunity, and that's exactly what happened for another nice rally to the upside. So just a phenomenal combination today of, even though it being a range day, there were definitely some opportunities if you waited for them and if you played them correctly. Certainly not an easy day to trade because it was very slow, very choppy, and kind of messy, but as long as you stuck to the plan, followed the rules, you probably did okay. Hopefully found it useful, hopefully found it interesting, maybe a little entertaining, and we'll see y'all next time.